G'day guys, it's Nathan Birch here from B.Invested.com.au. I just wanted to hop on camera today and talk to you a little bit about what's happening in the current market in Sydney and New South Wales and what we're experiencing as far as property sales and property growth. So I don't know what you've been seeing in the media lately. I haven't been checking into too much of the news.com or anything like that. Been too busy for that stuff. But what I'm personally seeing is a big shift and something I've been expecting for a long while and been talking about for many years and been seeing more and more over the last couple of years. And that is the Sydney market is moving and it's moving upwards. And the reason behind that is a few underlying foundations which we need to consider. And I wanted to run through that with you all today. So first of all, what I've been personally experiencing as a professional investor myself and on those on behalf of my clients through property investment agents that have been helping out is that the Sydney market over the last 6 months has heated up dramatically. And when I say the Sydney market, I mean anywhere from inner city all the way out to the Blue Mountains, all the way down to Campbelltown, all the way up the Central Coast, even areas like Newcastle. And what I'm finding is that properties are actually selling for more than asking prices. So today I'm just up travelling around New South Wales as I do, and I've been working on deals as I've been on the road and talking to agents. This video comes with a bit of frustration because things are just selling straight away, and as soon as I hit the marketplace, what I'm finding is that, for example, units in Mount Druitt, we've spoken about Mount Druitt units for many years and have been buying properties out there and making lots of money. Personally, I love it because the property market is moving and each property I've bought is making an extra 50 grand every 6 months sort of thing. What it means for other investors is that it's harder to get these sorts of properties that are cheaper, and you have to be a bit more creative and look at the numbers and go, okay, this deal's great, I'm going to take action on it immediately. So, for example, units in Mount Druitt today, like an old unit, they're selling for $230,000. This is June 2013, I'm forgetting what year we're in at the moment, but June 2013, two-bedroom units in Mount Druitt started around that $230,000. Going back 12 months ago, you could have picked up a cheap unit there for about $190,000, $200,000, still under that $200,000 price range. Rents on these properties around that $300, $310 per week, $320 per week. Obviously, as the properties are newer and modern and different sorts of configurations, they do go up in price up to anywhere to about $300,000. What do I foresee for Sydney over the next 6 months, 12 months? What do I see happening in the market, and why is this all occurring? Why is this occurring? We've got very low interest rates, the lowest it's been from the RBA ever. 2.75% interest rates, it's just cheap. Banks are offering interest rates at 4.99%, cheap. Cash flow, most properties are becoming cash flow positive, lots of investors moving back into the market as you're seeing confidence come into the market. Why are the yields so great and why is it attracting lots of investors to buy? Over the last 10 years, since about 2003, that's when the Sydney property market sort of had its bubble and popped and things sort of went stale after that. There's been a few little spikes, but the market went down, came back up a little bit and has remained pretty stable since. From that, what has happened, we've had the GFC in the middle. There's been a lot less finance for construction loans. There's been a lot less building. Also, Sydney is sort of the doormat to Australia. There's a lot of migration happening to Sydney. So there's a lot of people coming into Sydney, but not enough houses and units and properties being built to keep up with demand, and that's creating a shortage. I remember my first job ever when I left school, 2002, 2003, that was working in Western Sydney, showing rental properties for a real estate agency because I thought that's cool and that's what I wanted to do in life. And I remember at that point in time, properties would sit on the market vacant for anywhere up to 2 months, 3 months, 4 months, and you'd have to give away a couple of weeks free rent to get someone in there. In the current market, what we're finding through our Blink property offices is that when we have an open home on a property, there's just an abundance of tenants lining up, and we actually end up walking away with 3 or 4 applications, depending on the property. You could have half a dozen, could have a dozen, but there's a strong demand of tenants there, and as rental properties over time have high yields on them. People turn to buying, especially when interest rates are down where we are today, and it's just pushing a pent-up demand here. So prices are rising in Sydney. Where do I expect it to stop? Where do I expect it to cut out? Personally, I think that we're probably halfway through that cycle. It's not out there too much in the media, from what I understand. There's talks of properties that are going up and all that sort of stuff, but I do believe that probably halfway there. I would expect in 6 to 12 to 18 months' time to see anything that's in that sub $300,000 price range, $350,000 or below, to add an extra, say, $50,000 on it. I'm not urging everyone to go out there and go and buy properties, but what I'm seeing is that properties have gone up by that over the last 6 months, 12 months, and I expect to see it go up like that again over the next 12 months, roughly. What does it mean for you? If you're an owner of a property, it means a good time to be selling a property. What does it mean for you if you're a buyer? You need to be very conservative when buying a property. You don't want to be caught out paying too much for a property and losing money. You want to make sure that you're buying the properties, as I always say, below market value, with having a good strong cash flow there to support it. And also, when you find a good deal, it's important to take action on it straight away. I see too many people sit there and they will wait, see what happens, or have it 24 hours to think about a property to make a decision. It's very important in a marketplace where you do your research before going out to see a property, making offers before the property even comes on the market, from networking with real estate agents, and obviously once you've got a property with an offer and acceptance, sign a contract, get in a cooling off period, and get your due diligence done from there. Because if the property sits there for too long, it will sell and probably get a lot more money than what you're paying for it. So with it, I just wanted to hop on YouTube, tell you about what I'm seeing in the property market currently. I am still buying lots and lots of properties, and I'll keep you posted on other videos with that. Until then, we'll catch up soon.